Okay.
I'm just going to help answer that question because, as Nick said, he's not an economist and wasn't able to answer the question on interest rates and their medium-term perspective. Amongst my many talents, I am indeed an economist. But actually, I happened to be at the EBRD conference last week in London and listened to the head of the National Bank, Valeria Kontreva, talk about Ukrainian macro stability policy, macroeconomic stability policy, which gives the indicator of where key interest rates will be in the medium term. Now, if you're new to Ukraine, the answer is that we're going through a cleaning out of a very dirty banking system with the removal of related party lending, the closure of many failed banks, and this is going to create, through time, a much stronger banking system. Presently, we have a very high key rate. However, the central bank is now practically looking at inflation targeting for their macroeconomic stability. And they have a viewpoint that inflation is falling. And what you will see in the longer term is key lending rates will coalesce around inflation rate, with a little bit higher, with the 2 to 3% higher. So you would expect, probably according to what the central bank governor was saying last week, that by the end of 2017, you may start seeing inflation rates at about 12% per annum. That would indicate a prime interest rate at that point of about 14 to 15%. But it is dependent upon economic performance and inflation targeting, including the banking system. But those things are in place, and I think you can see in interest rates coming down over the next 2 years to somewhere in the low teens. And at that point, you're likely to see a bounce back in mortgage-related lending from more robust Ukrainian banks. And clearly at that point, a follow-through into real estate market pricing.
Okay, so I suggest we move into the infrastructure discussion, and I would ask Jock Mendoza to share about the experience of your group. As we know, your group has faced significant challenges in logistics, transportation, and infrastructure through the recent years because of the conflict. So how you resolve that, and what's your plans to move forward?
Thank you very much for the introduction. I'm going to talk today about infrastructure, but particularly about what business needs from infrastructure. Of course, operating in a country which has a conflict in its eastern regions is difficult, and our business operates across the contact line, meeting all of Ukrainian legislation. And clearly, the logistics and being able to run logistics chains which require you to move product from an area occupied by separatists to an area under the control of the Ukrainian government is difficult and complex. And I really salute our people on the ground who work tirelessly to sort out those operational headaches. However, the real thing we should look forward to is what's going to happen in the future. And I think all Ukrainian business, whether large business like ourselves, and maybe for those who don't know in the room, System Capital Management is Ukraine's largest financial and industrial group. We own Ukraine's largest private sector business, which is Metinvest, which mines coal, mines iron ore, puts it together in blast furnaces, produces steel, and exports it worldwide. So a big logistical and transport need in that business. The other area is DTEC, our energy business, which is Ukraine's largest private sector energy business, where we mine coal, take it to power stations, convert that coal into energy, and then distribute it to Ukrainian customers, and also export energy, electrical energy, and coal internationally. And we're also in gas and in renewables. So I think from our point of view, what we're looking for in terms of infrastructure is reform in the transportation sector. And this means freeing up the marketplace from state intervention, from post-Soviet bureaucracy, and from government control. And this is an absolutely vital factor if Ukraine is to take up its position as an important player in global markets. And I think the transformation of infrastructures is absolutely a necessity for Ukraine's long-term economic future. Now, we're a big stakeholder in this, as I've said, from our businesses. 23% of all cargoes that flow through Ukrainian ports come from System Capital Management Group. We're also a major customer of Ukrainian railways because the way in which that cargo either gets to the Ukrainian port or is from the port to our business is through the rail infrastructure. So efficient and effective infrastructure is key to the success of our business and to the future economic livelihood of our 300,000 employees across the nation. I'm sure most of you in the room today are pretty familiar with the fact that Ukraine's infrastructure is by and large post-Soviet, largely old, degraded, inefficient, and is a serious drag on Ukraine's economic competitiveness. And in the future, if sectors like agriculture and natural resources are to grow, we need to expand the capacity and speed of the rail network, and particularly the port sector, to be able to overcome bottlenecks. Now, what needs to happen for that to take place? Well, at present, infrastructure is starved of investment. But to encourage investment to come into the country, we need to have a review of the current legislative and regulatory base, and we need to create a clear marketplace with a level playing field and a simple and robust regulatory environment which protects the interest of all stakeholders. And all stakeholders in this case are the government, who by and large own most of the infrastructure assets, particularly in rail and ports. The government owns Ukrainian railways, it owns Ukrainian ports and controls them. But now they're going to have to work in partnership in the future with investors. And investors' interests will need to be protected from regulatory abuse and from corruption. Indeed, customers of both the ports and rail need to be protected in terms of their interest, as indeed does society in terms of getting the return from investment in resources. So what we need to see is a set of regulatory frameworks that encourage investment. Now, as we're a big consignee of cargo, we're a bit concerned that there are attempts to discriminate against capital because of its origins. In other words, if you're a big provider of cargo, you shouldn't be investing in ports. This is a ludicrous idea. In Europe, the fact is that most major providers of cargo are, in some way, investors in infrastructure because it's essential for their business. So we, a big business, interested in cargo and a major economic driver for Ukraine, we need to have equal access to the opportunity to invest in the port and rail sector. And we need that to be in place in order that we can invest safely alongside international partners who we know wish to come to Ukraine once that transparent regulatory environment exists. So it's not acceptable to have preferential rules. If we do have preferential rules, regrettably, we will reduce the pipeline for investment. And this will lead to long and expensive litigation, as we have seen in other countries, which will only keep our legal friends happy. And that's not good necessarily for anyone other than lawyers. To build effective cooperation between government and business and investors, we need to have something which will be relatively new for Ukraine. We need to have a clear medium-term horizon. That is not as the plan for, what is not the plan for next year, what is the plan for the next 3 to 5 years in terms of investment strategy in the sector. And we need to see these strategic developments broken down into understandable benchmarks so we can see progress. We don't need to hear there's going to be $1 billion investment in Ukrainian railways. We need to know precisely which projects are going to, where that $1 billion is going to be provided, how it will be broken down, what are the timelines for the projects, and what is the benefit and return for those. If we see that, then that will build investor confidence and also It will give clear benchmarks so we can see tangible results and hold government and other partners, including business, accountable for their investment performance. As to ports, what we need to see is a clear plan of denationalization of Ukrainian stevedoring companies to give broader access to Ukrainian ports and to encourage capital into the marketplace. We do need a robust law on port concessions. That's a fundamental building block of any infrastructure investment program. However, it's not the only criteria that's required. We need to understand also what is the objective that the government has in mind in terms of expanding port capacity that meets both demands of exporters and importers. And we need this action to take place quite quickly, but otherwise we're going to reach bottlenecks in terms of Ukraine's ability to export key products essential to the economy like steel or coal or iron ore or grain. Another area that requires a reform is transportation rates. These need to be pegged to a clear formula so to avoid political interference in terms of the setting of tariffs, which regrettably happens at present. And importantly, it's not about whether it's the port rate or the rate for freight transport on rail. To harmonize port and rail transportation tariffs to ensure that Ukrainian transportation costs are competitive with world markets. For example, at present, I could tell you that the cargo through Ukrainian ports has fallen. It's also fallen through Russian ports. But if you look at European ports on the Black Sea, cargo is continuing to increase in both Romania and Bulgaria. So already in the Black Sea area, Ukrainian ports are losing out to better regulated, better organized European ports. And we need to make sure reform moves quickly to change away from that. I think on port charges, we need to simplify the process. I had a chart which I'm not going to put up, but for a Ukrainian port, there are 23 different tariffs charged when a ship comes in, 23. The number for China is 6. If I compare the cost of taking a post-Panamax ship into a Chinese port compared to Ukrainian port, the Ukrainian port is a remarkably $40,000 more expensive per vessel. And the question is why? Usually corruption. These costs must be removed if it's to be effective. Lastly, I think what business wants is improved quality of reforms and their timely implementation. We need the government to come up with investment opportunities that are real, that have the details in place, are backed by a regulatory environment, and then we will be ready to invest. If the government doesn't do that, what will happen is that Ukrainian state-owned ports will lose out, and investors like ourselves will move our cargo and our investments towards private terminals. So I think it is a matter of urgency that in the transport sector, both in rail and in port, that the government act now, or they will have a failed opportunity to be a partner in the revolution of Ukrainian infrastructure. I understand that the transport minister, who should have been here today but isn't, because I understand quite rightly he's with the Prime Minister in Odessa, looking at the problems close up, and that's good that they're doing that. But I understand the minister has many challenges. He has to overcome a Soviet-style bureaucracy and decades of mismanagement, and we know that won't happen overnight. But we, as a large business, and I'm sure other Ukrainian businesses and international investors, will be ready to play our part in improving infrastructure and in opening up Ukrainian markets and Ukrainian exports to play a crucial role as part of the global integrated economy.